January 1st, 2026. That's the date. Circle it. Remember it. Because on that date, something changes in the tax code that's going to blindside millions of gamblers across America. You can break even gambling for an entire year and still owe taxes. Yeah, you heard that right. Win $10,000, lose $10,000, walk away with zero profit, $0 in your pocket, and the IRS can still hit you with a tax bill. They call it phantom income. Income that exists on paper but not in your bank account, not in your wallet, nowhere except the forms you're going to have to file next April. And this isn't some conspiracy theory floating around Reddit. This is federal law, written, passed, and scheduled to take effect in less than 6 weeks. If you gamble, sports betting, slots, poker, blackjack, lottery tickets, anything, this video might save you from a tax nightmare you won't see coming until it's too late. Because here's what nobody's telling you. The rules just changed. And if you don't understand how, you're about to get destroyed. Let me start with what most people think they know about gambling taxes. The conventional wisdom goes like this. If I didn't make a profit, I won't owe taxes. And for years, that logic held up pretty well if you itemized deductions and kept proper records. You'd report your winnings as income, sure, but then you'd deduct your losses up to the amount of your winnings, and you'd net out to roughly zero taxable gambling income. Simple, fair, made sense. But January 1st, 2026, that math breaks. Here's the new reality, and I need you to pay close attention to this because this is where people are going to get crushed. Starting in 2026, you still report all your gambling winnings as income. That part hasn't changed. You can still deduct your losses, but only if you itemize deductions instead of taking the standard deduction. But here's the killer. You can now only deduct 90% of your losses, and they're still capped at your total winnings. That 10% gap, that's the trap. That 10% is what creates phantom income, taxable income on money you never actually made. Let me say this as clearly as possible because this is the sentence that should make every gambler freeze. In 2026, even if your gambling losses exactly equal your gambling winnings, even if you broke perfectly even for the year, the federal tax code will only let you deduct 90% of those losses. The government is going to tax you as if you won the remaining 10%. Even though you didn't, that's phantom income. Income that doesn't exist in reality, only on your tax return. And before you think, well, that can't be that bad, let me show you exactly how devastating this gets with real numbers that real people are going to face in 13 months. You gamble throughout the year, some good nights, some bad nights. You're not a professional. You're not trying to make a living. You just like to bet on sports, hit the casino a few times, maybe play some poker with friends. End of the year, you add it all up. Total winnings, $10,000. Total losses, $10,000. Net result, zero. You broke even. Under the 2025 rules, if you itemize, you can deduct up to $10,000 in losses against that $10,000 in winnings. Your taxable gambling income nets to zero. Makes sense, right? You didn't profit. You don't pay tax. But in 2026, the new rule kicks in. You can only deduct 90% of your losses. 90% of $10,000 is $9,000. So here's what your tax return looks like. Gambling winnings reported, $10,000. Gambling losses deducted, $9,000. Taxable phantom income, $1,000. You broke even. But the IRS is going to tax you like you made $1,000. If you're in the 22% tax bracket, that's $220 in federal taxes on money you never made. Add state taxes if you live in a state that taxes gambling income, and you could be looking at $300, $400, maybe more. And that's just one person with $10,000 in action. Now here's where this rule turns vicious. This doesn't just hit casual gamblers. This absolutely destroys high-volume players, sports bettors who cycle bets daily, poker players grinding cash games and tournaments, slot players chasing bonuses and free play. Anyone with high handle, meaning lots of money moving through, even if their net profit is small. Let me give you an example that's going to make your blood run cold. You're a serious sports bettor. You bet on games throughout the year. You track everything. You're disciplined. You know what you're doing. End of the year, total winnings, $100,000. Total losses, $100,000. Net zero. You broke even. You didn't make a dime. In fact, you probably spent hours analyzing games, building models, doing research. You put in work and walked away flat. But in 2026, you can only deduct 90% of your losses. That's $90,000, which means your taxable phantom income is $10,000. If you're in the 24% bracket, that's $2,400 in federal taxes. State taxes could push that to $3,000 or more. On money you never made. That's what's coming. That's what lawmakers decided was fair. And the worst part? This hits people who are trying to do everything right. People who keep records. People who itemize. People who track every bet, every session, every win and loss. The government is about to punish responsible gamblers for following the rules. Here's the part where most people get confused, and this confusion is going to cost them everything. When you hear gambling winnings, and you probably think, that's what I cashed out, that's what I took home. Wrong. For tax purposes, gambling winnings are tracked as individual wins, not your net profit at the end of the night. Let me explain how this works at a casino. You sit down at a slot machine with $500. You play for 3 hours. You hit a few bonuses. You win some spins. You lose some spins. You cash out at $500. You broke even. But here's what the casino's tracking. Every single win you hit during those 3 hours gets recorded. You might have won $2,000 in total winning spins and lost $2,000 in total losing spins to end up at $500. Your paper winnings? $2,000. You're feeling? I broke even. The tax reality? You report $2,000 in winnings and can deduct $1,800 in losses under the new rule. Phantom income? $200. This is how people who feel like they barely won anything end up with huge taxable gambling income on their returns. Because you're not reporting your net, you're reporting your total wins, and then trying to deduct your total losses, except now you can only deduct 90%. Sports bettors, this hits you hardest. You bet $500 on a game. You win, now you've got $1,000. You bet that $1,000 on another game. You win again, now you're at $2,000. You bet that, you lose. You're back to $500. Break even for the day, but your paper winnings? $2,000. And in 2026, you can only deduct $1,800 of your losses. The system is designed to create phantom income. Let's be crystal clear about what changed. Before 2026, the federal tax rule was straightforward. Report all gambling winnings as income. Deduct gambling losses up to your total winnings if you itemize. That's it. Clean. Simple. If you broke even, you owed nothing on your gambling activity. Starting January 1st, 2026, report all gambling winnings as income. Deduct gambling losses, but only 90% of them, and only if you itemize and still capped at total winnings. And here's the brutal twist that most people haven't figured out yet. If you don't itemize your taxes, if you take the standard deduction like most Americans do, you can't deduct gambling losses at all. Let me repeat that because it's important. If you take the standard deduction, you get zero deduction for gambling losses. None. Not 90%, not 50%. Zero. So if you're a casual gambler who takes the standard deduction and you have $5,000 in winnings and $5,000 in losses, you're reporting $5,000 in taxable income with no offsetting deduction. That's not phantom income. That's a full tax bill on money you didn't keep. The 90% rule hits people who itemize, but the standard deduction problem hits everyone else, and most people don't even know this is how it works. Let's name the danger zones, the profiles of people who are about to get hit hardest. Number 1, sports bettors, high volume, low margin, lots of bets cycling through. Your paper winnings explode even when your actual profit is tiny. In 2026, that 10% gap is going to cost you thousands. Number 2, poker players, big swings, lots of sessions, tournament buy-ins and cashes creating huge paper totals. You can grind all year, break even, and still owe tax. Number 3, slot players, especially anyone chasing bonuses, free play, or loyalty programs. You're putting huge volume through machines. Even if you're flat or slightly down, your win-loss statement is going to show massive winnings and losses. And that 10% gap applies to everything. Number 4, anyone who already itemizes. If you itemize deductions, mortgage interest, charitable giving, state taxes, this rule change directly affects you. You're not shielded by the standard deduction. The 90% cap is your new reality. Number 5, people in states that tax gambling income. Some states follow federal rules for gambling deductions. Others have their own. If your state taxes your gambling winnings and doesn't let you deduct losses fully, you're getting hit twice. Federal phantom income plus state taxes on top. The worst-case scenario isn't hypothetical. It's this. You think you broke even. You feel good. You didn't lose money gambling this year. Then April comes. You file your taxes. And you owe $2,000, $5,000, maybe $10,000 on income you never actually had. And you don't have the money to pay it because you broke even. So here's the obvious question. Why would lawmakers do something this aggressive? Why would they create a rule that punishes people who don't even profit? The answer is simple. Money. This change is projected to raise roughly $1.1 billion over 10 years. To Congress, that's a revenue generator, a way to fund other priorities without calling it a tax increase. To gamblers, it's a landmine buried in the tax code. And here's the thing. The gambling industry fought this. Casino operators, tribal gaming leaders, sports betting companies. They all lobbied against it. They knew this would hurt their customers. They knew it would reduce gambling activity. They knew it was bad policy. They lost. Because when Congress needs revenue and can target a behavior that some people view negatively, gambling, it's an easy vote. Lawmakers can go home and say, we raised money without raising taxes on hardworking families. Except they did. They just hid it in a deduction cap that most people won't understand until they're staring at a tax bill. Now, to be fair, this rule is so controversial that there's been talk about repealing it. Lawmakers from Nevada, New Jersey, and other gaming states have introduced bills to reverse the change. Industry groups are lobbying hard. There's a chance, maybe not a big one, but a chance that this gets fixed before it takes effect. But here's the problem. As of right now, it's the law. It's scheduled to start January 1st, 2026. And if you're sitting around hoping Congress will save you, you're making a mistake. The smart move is to assume this is real and prepare for it. Because if it does take effect and you're not ready, you're going to get crushed. And even if it gets repealed, understanding how this works will make you a smarter gambler and a smarter taxpayer. All right, let's talk about what you can actually do. And let me be clear, I'm not a tax professional. This isn't tax advice. You should talk to a CPA or tax advisor who understands gambling taxes. But here are the practical steps you need to know about. The IRS expects detailed records, dates, locations, amounts won and lost, tickets, statements, screenshots, everything. If you can't prove your losses, you lose the deduction entirely, which means you pay tax on 100% of your winnings with zero offset. That's infinitely worse than the 90% rule. Simple tracking method, use a notes app on your phone, take photos of every ticket, download monthly win-loss statements from your casino or sportsbook, keep transaction history from every app you use, create a spreadsheet and update it weekly. The phantom income trap is the gap between how you feel and what the tax forms say. You feel like you broke even. The tax form says you won $50,000 and lost $50,000, and in 2026, that means you owe tax on $5,000 of phantom income. If you're a high-volume player, you need to know your paper totals. Not just how much you're up or down, but how much total action you're putting through. Some gambling winnings trigger automatic withholding. Jackpots over certain amounts, tournament winnings, big sports betting payouts. The casino or sportsbook might withhold 24% for federal taxes. But most gambling income doesn't have withholding, which means if you end up with a big tax bill from phantom income, you're paying it all in April. And if you didn't set money aside, you're in trouble. If you're a serious gambler, talk to a tax professional about making estimated tax payments quarterly. It's a pain, but it's better than a massive bill you can't pay. This is the psychological shift you need to make. In 2025, breaking even means no tax. In 2026, breaking even can mean a significant tax bill. So you need to either aim for real profit, enough to cover the tax on your phantom income, or reduce your volume so your paper totals don't explode. Gambling losses are only deductible up to your winnings, and only if you itemize. If you lost more than you won, you can't deduct the excess. If you take the standard deduction, you can't deduct anything. That was always true, still true in 2026. The difference is now it's also 90% instead of 100%. Before we wrap, I want to zoom out for a second because this isn't just about gambling taxes. This is about how the government hides tax increases. They don't call it a tax hike. They call it closing a loophole or adjusting a deduction or modernizing the code. But the result is the same. You pay more. And they always target behaviors or groups that don't have broad political support. Gamblers, gig workers, small business owners, independent contractors. People who don't have massive lobbying operations or voting blocks. The 90% gambling loss rule is projected to raise $1.1 billion over 10 years. That's not a lot of money in federal budget terms, but it's a lot of money to the individuals paying it. And here's what bothers me most. This rule punishes responsible behavior. If you gamble recklessly, don't track losses, take the standard deduction, you're screwed, but you were probably already screwed under the old rules too. But if you're disciplined, if you keep records, if you itemize, if you're doing everything the IRS asks you to do, you still get hit with phantom income. That's not tax policy. That's a money grab. So let me bring this home with one sentence that every gambler in America needs to understand. Starting January 1st, 2026, breaking even at gambling can create a tax bill on income you never made. You didn't win. You didn't profit. You didn't take home a dime. But on paper, according to the IRS, you made money, and they're going to tax you on it. If you're not tracking your play, if you're not planning for this, if you're high volume and don't realize how much paper income you're generating, this is going to hit you like a freight train. Drop a comment right now. Do you think this rule actually takes effect? Or is there any chance Congress reverses it before January? And if you want, I'll make a follow-up video showing the exact break-even tax math for 5 common gambler profiles, what to track weekly to avoid surprises, and the smartest 2026 safe strategy for different types of gamblers. But here's what you need to do today. Share this video with anyone you know who gambles, because the mainstream media isn't covering this. Your sports book isn't warning you. Your casino isn't sending emails. This is flying under the radar, and people are going to get destroyed by it. If you've made it this far, hit that subscribe button. We cover stories like this that affect real people with real money on the line. No fluff, no clickbait, just information you actually need to know. Thanks for watching. I'll see you in the next one.